The AI bubble has popped. How bad is it going to get? We can also talk about the repo market. Has liquidity dried up? Where are we going? Also, is the economy falling off cliff? We're going to talk with the one and only Mr. Dan Bird, who has been remarkably right these last 4 or 5 years. So we're going to start with a simple question. Has the AI bubble popped? Mr. Dan Bird, what do you got?
Well, I don't know. Don't know
That's
the answer
fair.
to that.
That's fair.
I would
Because,
I would
yeah.
say let's call it. Let's imagine that there are multiple bubbles floating around,
Okay.
and some of them may be popping, and some of them may not be. So does that mean the whole AI bubble has popped? I would say not yet,
Okay.
but there
Would you
certainly
say
are
the
some.
AI bubble is deflating? Maybe.
Deflating would be a better term. Yeah,
Okay.
I don't think it's popped yet, but deflating, I think certainly. We'll look at Nvidia in particular, which is very interesting. They've got earnings coming up the week after next,
Yeah.
and we can
Yeah.
look at the other big tech cap stocks, but big cap tech stocks. But they're the ones really that have been propping the market up.
Yeah,
So
it's really funny. There was an interview, and forgive me, I think his name is Sam Altman,
yeah,
CEO of
hmm open AI,
OpenAI. Yeah,
right?
so he was on a podcast, supposedly a very friendly podcast, where the podcaster asked him basically, "Hey, you're a $20 billion revenue company. How can you have $1.5 trillion in commitments in expenses, right? Capital investments?"
Right.
And he basically shit the bed answering that question, which kind of pricked all of this. And it's gotten worse every other day. And again, I've seen charts, bubble charts of all this money, going around and like, hey, Nvidia
Yeah.
is going to do this and they're going to do that, and they're just slamming all these the same dollar thrown around. It looks like a
Circular circular
big
financing.
mess.
Yeah.
It does not look good.
Yeah. So the big question, as always, is can they produce the revenue and earnings
Mhm.
to accommodate that big mess, all of that new capital expenditures that they're putting out? Normally, big cap tech companies have used cash to finance things,
Mhm.
but now they're actually borrowing money to do it.
Yeah, yeah. Did you see
So,
the CFO of OpenAI kind of say and then take back the whole idea of getting a government bailout for this? I was like, oh my God, I can't believe you used that word bailout. Like, what? Yeah,
right.
crazy, crazy. Not a good look.
Uh, yeah, I mean, if that continues, and there's evidence behind it, then the bubble could definitely pop. Right now, I would say it's deflating, but it's not popped yet.
No, I think that's fair. I think what we've seen is the first release of pressure. And again, releasing pressure is not a bad thing, right? That can
Yeah, oh,
prevent a
absolutely.
pop, right?
Yeah, I mean that's good for the markets. I've said that before. It's good for the markets to pull back and correct.
Absolutely. Absolutely. But this does have, you just never know what, when deflation goes to true fear, and then fear
Right.
could really take these things lower. So,
Well, that's
I,
that right there is a component of a bubble
correct.
because a bubble implies that a lot of people are chasing something. In fact, they're chasing
Oh,
the new
momentum.
highs,
Yep.
chasing momentum, right? And when that ends and that pop occurs, then fear comes in and everyone rushes to the exits trying to get out at the same time.
Yeah.
And the market goes down very quickly, much faster than it went up.
Yeah. The question I wanted to ask you today, because again, you look at the market so well, was, and I don't think there's any question that the AI companies took it on the chin Wednesday through Friday. But my question was, did that money go to cash,
Ah,
or did it go to the other 493? Right? Was there a transition to
yes,
other things? That's what
that
I wanted
is
to ask you.
that's the big question. Yeah, so far as from what I can tell, it's rotating to other sectors.
Okay. So in an environment where the
It's not
big
going to cash.
seven, yeah. So we're in an environment where the big seven were over indexed, taking the the pressure out of the top and moving it to the others could actually make the entire market more healthy
Um, Healthy, yes. I mean, it would
or more balanced, I guess. Yeah.
broaden out the breadth, yes. But you
Yeah.
have to consider that technology makes up 35% of the S&P.
Yeah.
So
Yeah.
if money's moving out of that, even if it's just rotating into other sectors,
Mhm.
It's probably not going to be enough to continue the market going up. It may just end up moving sideways, which I've talked about in the past. I'll show a chart here in a second.
Yeah.
The Wyckoff market process, and the market
Mhm.
will go sideways for a while before it actually starts crashing.
Yeah.
So
Well, we'll get to that.
it doesn't happen all at once. It's going to give us plenty of warning.
Mhm.
And on my show that I do every day, I will talk about those warning signs
Awesome.
and
Yeah,
when
it's
they're coming.
folks, if you haven't subscribed to Dan Bird's YouTube channel yet, you are missing out. He does a show like this every open while the market's open Monday through
Right,
Friday. So if you're not tuned into that roughly noon Eastern, you're risking your own capital. So be careful.
right.
Yeah. The last thing I'll say before we start bringing up some charts that I want to look at is it looks like restaurant stocks are getting crushed, right?
Yeah,
Kava, Chipotle,
right.
fast casual is just
Hmm.
getting roasted. McDonald's even. And that's just a sign that I think really the I don't know what you want to call it, the bottom 60%, 70% are really stretched, right? When they start cutting back on
Yes.
that.
Yep,
Yeah.
that's right. Kava was a big winner last year.
Hmm.
And as is usually the case with retail and restaurant stocks, anytime there's a new company that comes out and they start opening stores and really ramping up, accelerating the number of stores that they open, that's what drives those stocks higher.
Hmm.
So there's a combination of either pulling back on the number of stores that they're opening or the amount of revenue they're getting from each store or restaurant
Hmm.
is declining, and which
Right.
I think is what's happening with Kava.
Right.
In fact,
Yeah.
a little bit of both with Kava.
Yeah. All right. Well, let's get
So,
into the AI bubble because again, we've got a lot of people on this channel in the tech industry, a lot of people interested in NVIDIA and all the AI companies. And they had a rough end of the week. So let's pull up some
right.
charts and see what you see.
All right. Hang on a sec. Let me share my screen. For those interested, breakpointtrading.net is the website, and the YouTube channel is right there. There's a little button in the upper right. So just go to this site and you can get to the YouTube channel from there. Try to do one around noon Eastern time every day. Um, and the newsletter that I put out every weekend is in this little box right here. I'm actually going to use that, refer to that today as well, because there's some really interesting things that are in there. So let's start with the chart that I mentioned before about the Wyckoff market process. So these are the market cycles. Oops, you're not seeing that, are you?
No, I'm still seeing your chart
All right,
screen.
there we go.
There you go. Yep.
These are the market cycles. So accumulation phase, markup phase, then there's a distribution phase and a markdown phase. Now the distribution phase can be deceiving because you can see right here, this reaccumulation actually looks like a distribution phase, right?
Hmm.
But the difference is it didn't break through the bottom, it broke through the top and continued to go higher.
Got it.
So we may be in a distribution phase in a number of those big cap names, those
Mm.
AI stocks.
Okay.
We haven't yet started a new markdown phase, however. That's why I say it hasn't popped. It may just be deflating.
Okay.
So I think that's really what's going on. If we look at that, look at all the Magnificent Seven right here. I don't want to talk about NVIDIA in particular, but I put it's called a zigzag chart on stock charts because it helps you to visualize the higher highs and higher lows,
Oh, I like that.
right? So you can see, we'll just start with NVIDIA. You can see it's been consistently going higher. Here's the trend line down here, but right now it's sitting right on the trend line.
Hmm.
So it's at a critical point right now. If NVIDIA, which reports in a week and a half, if they miss and this drops through that support line, that could start the whole process of that bubble popping.
Yeah, and to be clear, it's not only like I don't think there's any chance they miss. I think what we're going to start to see with Nvidia is what used to be called the whisper number,
Yeah.
and then also their raise. I think Nvidia could get in trouble just for not raising enough. I don't think it's enough for Nvidia to beat. I think they have to
Yes.
beat and raise.
That is absolutely correct.
Okay.
And there was a stock, I can't remember the ticker, somebody asked about on my YouTube channel. A lot of times people will say, can you bring the chart up for this stock or that stock? And I'll bring it up and talk about it. But they said, what happened to, I don't know what, I can't remember which stock it was, but they said
Broadcom, maybe?
they had great earnings. The
Yeah.
earnings were great, the revenue was great, and the stock gapped
Tanked.
down.
Yep.
What
Yeah,
happened?
they didn't raise. Yep.
They didn't raise, right? In fact,
Correct.
they pulled back future potential revenue.
Mm-hmm. Yep.
So that will, in this environment, that is going to punish any stock. We have extended valuations right now across the board with most stocks.
Mm-hmm.
So they have to not only beat revenue and beat earnings, but they have to raise guidance. They can't even keep guidance like it was.
Yeah.
They have to beat across the board on everything. If they miss on any one of those, they're going to get punished.
Oh, big time. Yes.
That's
That's
just the
exactly right.
environment. That's the environment that we're in right now. So
Mm-hmm.
we'll just step through each of these, and I'll come back to NVIDIA in a second. Actually, right here. So this first one at the top, it has NVIDIA versus the S&P. That's the red line.
Mm-hmm.
And the blue line is NVIDIA versus its own industry group. So its peers.
Okay.
All right. So the pink
Yep.
line right there is 0. So if it's below the pink line, then it's underperforming its peers. All right. It's clearly outperforming the S&P. But the next one, I took the S&P away, took it off of this panel so that you can see how they're doing versus their peers much more clearly.
Mm.
Okay. So that's what this one is. Now you can see NVIDIA versus semiconductors.
Got it.
And by the way, for context, let me show you. I think I showed this last week, but here's semiconductors. Going back 12 years. And notice what happened in the end of 21. This is December of 21, just before the 2022 bear market. Semiconductors, the distance away from the 200-day moving average was 100%.
Wow.
Right here in July of 24, the distance away from the 200-day moving average was 100%.
Hmm.
And where are we right now? As of last week,
Look at that.
we are at 100%. So you can see what's happened every time. And this is only happened 3 times, including last week. This has only happened 3 times in the last 12 years, ever since the 2013 breakout.
Okay.
All right. So it just happened again. So semiconductors are very vulnerable right now because
they
of
are
this.
richly valued.
They're very richly valued. That's right. So let's go back to the big cap and NVIDIA in particular. I'll talk about this again. So NVIDIA reports in a week and a half. Have you noticed the narrative that the CEO, Jensen Huang, lately when he's had interviews with people?
I have not noticed.
Sounds like he's whining. He's coming up with excuses.
Oh,
He
really?
whines about China. China is the reason we can't get more chips out. Every other way he can express it. The
So
reasons
you think
why
he's trying to talk down the market? You think that's what he's trying to do?
Yes, that's what I think's happening. I think he's going to miss in a week and a half. So at any rate, NVIDIA is right on the edge right now. So they're underperforming their own peer group. Now let's look at another one just for context. And I put both of these charts in my newsletter this week. So let's look at Micron, which has been outperforming. It's also in the semiconductor group. And see with that, and keep an eye on versus the semiconductors.
Got it.
There's Micron. Here's Micron versus its peers. Here's NVIDIA versus its peers.
Got it. Okay.
All right. So what does that tell you?
You tell me.
I think it says that NVIDIA is set up for a miss when they report. And NVIDIA could be the pin that pricks the bubble.
Oh, no, I mean, there's this meme, I think, with people in the back of a truck and one person has his or her hand on the latch. That is NVIDIA, right? If that person opens the latch, everybody falls out.
Right. Yeah. So this is Oracle, which had a great run. This is again an AI play. So they had an announcement about
Yeah, they
I
had one
think
of those circular references with OpenAI, and it skyrocketed. And
right,
then, oh, by the
exactly.
way, gave it all back.
Exactly. And I'll reference again, we talked about this a couple of weeks ago about Jesse Livermore and how he can recognize where tops are when the market is at a top.
Hmm.
And he says that the thing to watch are the leaders. When the leaders fail to make new highs,
Yep.
and that's number one. And the next thing is they break below their previous lows.
Yep.
When the leaders do that, then the whole market is about to come down.
Well, look
So
at
here's
Oracle. It's
Oracle,
clearly doing that.
right? There's Oracle. Here's Palantir.
Oh, it had
Palantir
a
is
rough,
sitting right on
rough
the
end of
line
the
now,
week. Yeah, rough end of the week.
right?
Yep.
So they're sitting right there on the
Well, what do you
line.
think about Michael Burry taking pot shots at Nvidia and Palantir? Did you see that?
Um, I think Michael Burry has called 42 of the last two recessions.
Yeah, I think that's fair. I think he's been. I think he
I mean,
generally leans bearish, and he's obviously
he's
been
generally
right
bearish, and like I tell everyone everyone like that's bearish, they will be right at some
eventually.
point. At
Yeah,
some point, they will be right.
I agree. That's fair.
But
I think
but
that's
I
really fair.
I don't think it makes any sense to make investments based on what they're saying.
Okay.
I mean, they could be saying that because they already shorted it. He
Oh,
could have
they are.
shorted it.
He
Yeah, he could have
clearly is.
shorted it up here. He might be looking great. He might have shorted it down here,
Yeah.
right? So he's losing money.
Yeah.
So the only way to make it up is for other people to start shorting. So he starts talking about it.
Yeah.
I don't think I don't think it's a good idea to listen to all the talking heads, including you and I.
No, I agree with that 100%. Do your own research. Yep.
Make your own decisions, look at the data, and then make your own decision. So there's Palantir, there's Tesla. Notice how all of these are kind of going sideways and they're sitting right on the line.
Yeah.
So the first thing that Jesse Livermore said was they struggle to make new highs.
Mm-hmm.
And
Check.
the second thing is they break below their previous lows.
Yeah, it's close.
All right. There's Apple. Apple's still making new highs.
Okay.
There's AMD.
Mm.
AMD definitely made a new high, but now it's coming down. It's actually making new lows now. Broke down
Mm-hmm.
below its trend line. It's below the 21-day moving average. Amazon, again, looked really great. And now it's coming back down, sitting right on support line. It's really a critical point right now for all of these. Arista Networks has broken through the previous
Mm.
lows. Broadcom heading down, struggling to make new high, heading down again. Costco has been in a downtrend for quite a while. GE Vernova clearly breaking below the lows. Google has been one of the winners, one of the ones that look good, but here recently, you can see
Mm-hmm.
it's, and this is what this zigzag thing really shows you, is you can see that it's making a new lower high right now,
Mm-hmm.
right there. Eli Lilly has been fantastic, and Eli Lilly just announced, that they're going to have a pill form
Mm.
for their weight loss drug.
GLPs. Yeah.
Right. So they went right up almost exactly to its long-term high, basically making a double top. So
Mm.
it pulled back from there. But Lilly actually has a really good business model that might continue to go higher. It's not a tech platform. Look
Ooh,
at Meta.
look at Meta. Oh,
Meta clearly has broken below the previous lows, and Microsoft sitting right there. So I think the theme, as you're looking at these, number one, almost all of them look like they're struggling to make new highs.
okay.
That's the first criteria. And a number of them are either sitting right on the support line or have already broken through the bottom.
Got it.
There's Micron, Netflix already broken through, and
Mm-hmm.
then back to Nvidia.
Gotcha. Very,
All
very
right.
cool.
So
So it's an important week. Is what I'm hearing you say is the next couple of weeks are really important. Nvidia's earnings obviously are critical.
Nvidia is the most important one.
Got it.
Now, let me show you one other thing, because I thought the way things looked on Friday, because the market in the beginning of the day was heading down, lower. In fact, let me show you. This is one thing that I do on my YouTube channel every day. The very first thing I do is I just review where we are using 10-minute charts, where we are at that point in the day. And
Mm.
remember, it's around noon, right? So these are each one of these bars is a 10-minute time frame.
Got it.
The vertical line right here is Monday's open. So I update this every Monday. I update where Monday's open is, where last Monday's open was, et cetera, what money flow looks like. So every day I will look at this and you can see each of the days, Monday, Tuesday, Wednesday, and you can tell what the trend is.
Mm-hmm.
Trend has been lower, right? And then here's technology. So these are the three aggressive sectors. This is what I was talking about with rotation. These are the three aggressive sectors. Even though on Friday technology perked up a little bit at the end of the day, but discretionary and communications continue to go down. So discretionary is where Amazon and Netflix, Amazon
Tesla.
and Tesla are.
Mm-hmm.
Communications is where Netflix and Google and Meta are.
Mm-hmm.
And then technology is where everything else, like NVIDIA, AMD, and Apple.
Got it.
All right. Technology makes up 35% of the S&P. So it is the biggest sector. So those are the aggressive sectors. You can see what the trend looks like over the week. Next thing is the defensive sector. So where is that rotating to? Well, there are the defensive sectors.
Look at that. Yep.
So the rotation, the other ones were moving down all week. These have been moving up all week and moved up considerably on Friday.
Yep. So
that
it is rotation, not cash, to one of my earlier questions.
Right. That's what I'm referring to. So here, these are the cyclical sectors. They're neither aggressive or defensive. They're kind of in the middle, and they are the beneficiaries of moving out of technology, financials, healthcare, industrials. So that's where the money is going. It's moving out of technology. It's moving into the other sectors. That's really the way to look at it.
Okay.
So the one thing that happened last week, and I talked about it during my show on Friday. And remember, my show is right about here at noon. Yep. So the market had been selling off, gapping down, in fact, gapped down on Tuesday, went up on Wednesday, went down on Thursday, gapped down on Friday. So right here at noon, I said the market is continuing to go down. If this ends this way, then we will have done something last week that has not happened since the low in April, since the bottom in April, since before the bottom in April. If it continued down, now you can see what happened. It didn't continue down.
Right.
All right. But I'll show you what I mean. Look at this chart right here. This is of the Qs. So at the top, this is a weekly chart.
Mm-hmm. So
here's the bottom in April right here. Once we went above the 8-day moving average, this is an exponential moving average. It's a week, not a daily, it's a weekly. Okay. So this is an 8 EMA on a weekly chart. All right. You see right there where it closed above it.
Yep.
That was in mid-April. We have not closed below the 8 EMA ever since then.
Oh, I see it. Okay.
We have not closed below it. But look where the market went. So at noon, it was down here. It was below it.
Yep.
And I said, if we stay here, we will have done something that has not happened ever since the bottom in April.
Got it.
Now, what happened at the end of the day is we got a rally and it came back again. Mm-hmm. So the buy the dippers out there are still convinced that the market is going to continue to go higher. Mm-hmm. And this is what happens when people have fear. There's lots of reasons why the market should go down. The bubble bursting, the repo window, the government shutdown.
Bitcoin going to 100K.
I mean, Bitcoin, we'll look at Bitcoin in a second. All of those things, lots of reasons why the market should go down. Yep. But what happens is everyone, especially retail traders, everyone is used to the market going up. So when the market pulls back just a little bit, and you can see it has never gone below this 8 EMA. It pulled back to the 8 EMA, and all the buy the dippers jumped in and said, that's it, we're done. Time to get back in because we're going much higher. Okay. Now, what I think will actually happen is that Wyckoff market cycles will take hold and we're going to go sideways for a little while. And then we'll start to go down. Now, we're in the best part of the year. Mm-hmm. We have now, I think it's next week, companies start buybacks again. Right. So companies will be buying back stock. There's going to be a lot of window dressing from mutual funds and
end of year,
large companies, end of year kind of stuff. So
what about government shutdown? You see this thing ending before Thanksgiving?
I have no idea.
Yeah.
I don't know.
Yeah.
I don't
My
know.
answer is no. It's not
Yeah,
moving.
it could be no. It doesn't make any sense.
Okay.
But
All right.
the market doesn't care about the shutdown until it does.
Oh, it's going
Uh,
to eventually. I mean, they're already canceling
eventually
airlines.
it will. I mean, they're already cutting flights, so it's going to affect the airline industry.
Hmm.
It's going to affect it. It could be a reason for the restaurants, frankly.
Yeah. Yeah. Could be.
I go over here and look at Kava just for curiosity.
Ooh, look at that chart. Boy.
So there's Kava just continually going down. Now, Kava has telegraphed this for quite a while,
Hmm.
all the way back in February, when it couldn't get back above, try to get above the 50, went above the 21 a little bit, pulled back, keeps getting rejected around that same area, rejected at the 50 now. So it's been giving. It's not like an all of a sudden thing.
Right.
Chipotle the same way. Chipotle looks pretty bad.
Yeah.
Um, Eat Brinker, which is one that actually was doing really well last year,
Hmm.
another restaurant group. So right here in February, it made a high. In July, it could not get back. So that's a lower high.
Right.
And then it's just continually making lower highs since then.
Yep.
So all of the restaurants have been telegraphing this for quite a while. It's not something that just happened.
Okay. All
So
right.
in other words, this is not necessarily because of the shutdown. This has been happening before the shutdown started,
Mm.
but the shutdown will certainly exacerbate it, I think.
Yeah. Well, let's move on to
So
the repo market, right? We got the repo
yeah,
market is a
so
big.
that's the other thing, the repo market. Let's talk about that for a second.
Mhm.
Um, there's a great article in my newsletter that I would encourage anybody that wants to understand the repo market. This is a really great article to explain what it is, what it means. This is from Real Investment Advice. I put the link every week. That it's a free newsletter, so anybody can sign up and get it yourself as well.
Mhm.
But I put the link to the newsletter right in here every week, and then I take an excerpt out of it. So first, I talk about the market itself. AI earnings not strong enough. We just talked about that. We'll see what happens. Here's the Magnificent Seven versus the S&P versus the S&P 493. Let me make this bigger.
Got it. That's better.
All right, so that's the earnings consensus estimates for 26. So you can see the rest, other than the Magnificent Seven, is below zero,
Hmm.
right? So what is the repo market? This explains the whole thing. It explains what happened in 2019 when the overnight borrowing rate went from 2% to 10% in
Hmm.
a few hours. Liquidity froze. That's the key. So people can't get money. Liquidity freezes. That's going to affect the market.
Hmm.
And what did the Fed do? Very quickly, they intervened.
Oh
Now,
yeah.
in the Fed in their last meeting, they said that they are going to end quantitative tightening as of December 1st.
Correct.
And I don't think that in particular was a big surprise, but the fact that they were going to do it so quickly was a surprise.
Hmm.
The reason they were going to do it, they were going to do it so quickly is because of the repo market. They could see that the repo market was having issues, having trouble.
Hmm.
So this all shows you what it all means, what happens. Dealers needed to fund their balance sheets. Hedge funds rely on it for leverage. Money market funds use it to park cash overnight. It's also how the Federal Reserve transmits monetary policy. So when that repo market gets clogged, it will affect everything.
Hmm.
It is probably the least understood component of the economy from most people, but also one of the most important
Hmm.
components of the economy. All right, so here's the repo facility usage. You can see right here, just in the last week, how it's spiked higher.
Yep.
So, and the Fed went from abundant to ample right here, sitting right down here back at the line where they get very concerned. Now
Okay.
the Fed knows this. They've been watching this go down. That's the reason they ended quantitative tightening, right?
Hmm.
So here's a great example. You have a brand new, fully paid for Mercedes. You go to your neighbor and ask for an overnight loan of just $10,000, offering him the title of the car. Your interest rate should be close to the Federal Reserve's overnight rate, but instead, your neighbor says he wants 10%.
Hmm.
That difference is a risk premium that is deserved because the loan is backed by collateral. That's the repo window
Got it.
in a nutshell right there. That's what happened in 2019. Um, so this is why they announced the end of uh, quantitative tightening. Here's bank reserves are pulling back
Mm-hmm.
right now. It's not a dire situation by any means yet, but the trend is important to watch.
Mm-hmm.
Um, and at the end of this, right here, I'm gonna show you why we may end up going much higher into the end of the year, even with all of these things that are going on.
When you say we are going to go much higher, are you talking about the stock market, the repo
The
market?
stock
What are you
market,
talking about?
the
Yeah.
stock
Okay.
market. All right.
All right.
And he talks about it right in here. If the Fed takes steps to relieve repo pressure, which they will,
Mm-hmm.
it will trigger the opposite of a crash. In other words, the Fed's actions to stabilize the repo market may lead to a melt up in equities, where risk assets surge, not because fundamentals improve, but because liquidity returns in force.
Mm.
Not far fetched. Government shutdown has drained over 700 billion from the market. So this is an important thing to watch, this repo market.
Okay.
If it continues to go down and if it accelerates, and especially if the Fed says we're not going to wait till December 1st,
Right.
we're going to
Or
end
just stop
quantitative
it early.
tightening now.
Yeah.
I mean
That's a signal.
that signals that there's a real issue, real problem. But the next step that they will then take is they'll reintroduce quantitative easing.
Correct.
And when they do quantitative easing, all of this then will happen. We'll have a melt up in equities, and the
Well, you
market
have a
will
melt
take
up in all risk assets. Yeah.
right. That's right, and everything will take off into the end of the year. Now it's basically kicking the can down the road,
Oh,
right?
clearly. Clearly. Yes.
Eventually, we're going to have to uh, come to terms with this.
Yeah. So
But
I just want to make sure I want to put a point on that one. So obviously obviously December 1st is the stated date that QT will stop. I agree with you. If they stop early, that's a warning sign. Obviously flipping from QT to nothing to QE is a huge flip flop. Do you see them going all the way to QE this year?
um, I think it's really going to depend on this, and just because of this
Okay.
particular chart right here.
Okay.
This is a 3 month time frame, but this is basically where we are right now. So
Yeah.
this is the repo facility usage. This is banks coming to the window
Hmm.
to get repo to get.
Yeah. Okay. Yeah. I
If this continues like this for the next couple of weeks,
yeah.
or even 1 or 2 weeks, then yes, I think the Fed will end QT earlier, and I think they'll go to QE much quicker than anyone
Yeah.
expects.
I really hope they don't. I really hope we don't go right back to QE and do this all over again. But it is a possibility that I agree with.
Right, but they might not have a choice. They might have to
True.
do that.
Yeah. No, I mean, yeah, at some point. You can't have 10% overnight rates. Yeah, you can't do that.
Right,
System
exactly.
breaks.
So, I mean, I encourage everyone. There's a lot more to this article than what I'm excerpting here. So,
Hmm.
I encourage everyone to go get the newsletter. Here's, I just throw a bunch of interesting charts as I accumulate them through the week,
Yeah.
and I
Look
put
at
them in the
Berkshire's
newsletter.
cash position.
Right.
That's crazy.
Yeah. There's Berkshire's cash position. It's huge.
What is that
Here,
telling you? What is that
here's
telling
the price to sales ratio. This is the data on the S&P 500.
you? Mm.
Price to sales ratio. This goes back to 1990. I mean, just look at the chart and see that it's above anywhere it's ever been.
Yeah.
Price to book ratio, forward price to earnings, actually a little lower. 12-month dividend yield is
Yeah.
dropping off a cliff. There's Berkshire's cash ratio. Here's the one I showed last week. This is the
Hmm.
overnight repo
Yep.
agreements, right? So this is as of October.
Yep.
You can see how quickly it's come down lately. This manufacturing, there's a couple of real estate ones in here. Market is fairly valued.
Yeah.
CPI. CPI
You
is
see,
next week too, by the
did
way.
you, well, it's supposed to be, it's not coming, but
Yeah.
do you see consumer sentiment on Friday? How nasty that was?
No, I didn't notice it.
Second lowest ever. Only 2008 was worse. Future
right.
expectations, worst ever. Yeah, consumer sentiment is not doing good. And that, the
Yeah,
consumers are 60% of the economy.
I am beginning to not care or pay much attention to consumer sentiment anymore.
Okay. Because again, it's just an opinion and you'd rather watch what they're doing.
Because of social media,
Mm,
everyone is in an echo chamber.
got it.
So
I've said that too.
regardless of what side of the aisle you're on, you're getting the algorithms are hitting you with the things to make you click on stuff.
Got it. Yeah, I
And
agree with
that's
that.
what is driving sentiment. It's no longer a sentiment because of what's happening in the economy. It's sentiment because of the algorithms of social media. So I'm not going to pay attention to sentiment readings anymore.
I think that's wise advice. Duly noted.
Here's
Thank you.
this history of bubbles right there. You can see
Mm,
where we are right now, way up there. Here's gold and gold miners, percent of
mm,
total assets. It's actually way much. I was surprised at this one.
mm.
It's much lower than any of these other years.
Interesting.
Very interesting. China's nuclear energy boom versus
Yeah.
Germany's phase out. Nuclear is huge. Foreign central bank reserves,
Yeah,
U.S.
gold is
Treasuries.
higher. I talked about that this morning. Gold's higher than
Right.
treasuries.
That's right. There is your chart that you could have showed them.
There you go.
Uh,
I like it.
20 gold is 24%. Treasuries are 23% right now. World's most valuable assets. Gold
Mm,
is the most valuable.
yeah, that's pretty crazy.
Bitcoin is right over here. Meta. So there's a lot of really interesting little charts that I come across. 2026 state tax competitive index. You see the worst is California and New York.
Hmm.
Most U.S. subsidies. These are companies that get the most U.S. subsidies. Apple's
Man, you,
annual
you do a
sales
lot of you do this every week, huh?
every week.
Yeah,
This is
folks, you
in
got
here
to get
every
his
week.
newsletter. Yeah.
But what I do is, I read lots of different things, and as I accumulate, when I see things like this, charts that look interesting,
Yeah.
I just copy it into the end of the newsletter. So I do it throughout the week. It's not like I'm
Yeah.
re-
I understand.
researching all this, but I'm just sharing it with everybody. So everybody, here's used vehicle inventory spiking, best use electronic vehicles, debt to income ratio, how to
Mm.
become a seven-figure day trader, and
Start with
34%
eight
of
figures.
right. And this one's interesting. 34% of youngest voters now support communism.
Hmm. Look at that.
Yeah. I saw an interesting quote. Maybe I'll put it in next week. It said, if, how did it go? If you are, if you understand economics, then you would never be a socialist.
Right.
And if you are a socialist, then it means you don't understand economics.
It's about right. Yep.
So
Okay.
anyway, that's a bunch of, that's
Well,
just for this week.
let's close on how we started. So, summary for me, again, is AI in a bubble? Has the bubble popped? The answer is we don't think it's popped, but it's certainly deflating. The next couple of weeks are important. NVIDIA earnings in 10 days is critical. Not only NVIDIA earnings, but their expectations. I don't think it's
Right.
about beating. I think it's about raising. That they have to be
Yeah,
careful for.
exactly.
And as for the repo market, is certainly something to watch. I agree with you. There'll be warning signs like canceling QT early. I think if they go
Right.
before December 1st, that's a warning. And there's risk that they go right from QT to QE. And if they do QE, watch liquidity push asset prices higher, aka melt up. Is that a decent summary?
Yes. That's exactly right. Just before we end,
Uh-huh.
since we've got CPI coming up,
Oh yeah.
it may be coming up.
It
they
won't,
did
but
it
sure.
last. They did it last month. So here's the base effect.
Hmm.
There's a relatively small one that drops out
Hmm.
right there.
Yep.
This should be forecast 3.1, not 319%.
Gotcha. Yeah, missed a decimal. Yep.
But you can see here the trend. We've broken the trend now, so the trend is back towards the upside.
Correct.
12-month rate of change. And then if we look at commodities, I think all of this is leading me to believe that we're going to have a higher CPI.
Oh, you think it's going up from 3?
Yeah, I think we're going to go to 3.1.
Okay.
So here are the commodities. Oil and gas are actually still going down, so that's a good thing.
Hmm.
But the other commodities, other than DBA, which are these food commodities over here, agriculture, that
Right.
one went down a little bit, but the other ones actually are going up. DBC, this is a combination of a whole bunch of different ones.
Got it.
So crude oil, metals, and agriculture all together, that one's higher.
Mm.
So in general, we've got a smaller one dropping off, and we've got commodities, let's call it flat to slightly up.
Hmm.
I think it would not surprise me to see a 3.1 number.
Okay. All right. Well, we're not going to get it, but I think 3.1's reasonable.
Yeah.
Um, yeah. So it's going to be really interesting. Again, for next week, I'm going to be watching the tech stocks. I'm going to be watching the repo market. You've made that really clear. We're at a danger zone or risk zone, could go either way. So
Right.
I appreciate this. Dan, where can they find your YouTube channel?
And if they do start QE, it's going to be good for risk assets.
True. True.
They're
Oh,
going to
look at
take off.
Bitcoin. Just we talked about it earlier,
Oh,
but
yeah, yeah.
forgot to hit that.
Yeah,
Let's
hang on.
take a look. My bad.
I'm going to do that over here.
Yeah, let's not miss stuff we talked about.
Bitcoin's coming back up. So Bitcoin trades 24/7.
Hmm.
So it's basically, it's really interesting because let me
It went
zoom
sub
this.
100K, which I thought was an
Yeah, let me
interesting
zoom this
mark.
in a little bit. There's a 1 month view. So right down here, you see each of these long
Hmm.
tails
Yep.
on these are daily
Hmm.
candles right here. So each of those long tails came right down to exactly the same place,
Hmm.
exactly the same place, which was at 99, about 99,000, a little above 99 right
Hmm.
there.
Yeah.
Every single time. And every single time it comes back down there, it bounces and goes back higher.
Okay. So they've got very good support. They got a lot of buyers there.
Lots of buyers right down here. Exactly. So anytime it goes below 100, then that's when buyers come in.
Okay.
So one, two, three times, and now we're starting to get some higher lows. So today it's positive. That implies that tomorrow will probably be positive. I think tomorrow is going to be a follow through from the end of Friday
Hmm.
when the market started going back higher.
Right.
And I think you can see it on the S&P. It ended with a hammer
Right.
pretty clearly. You can see the hammer right there.
Hmm.
So that again, the market sold off, and then it got to a certain level, happened to be a Fibonacci level as well, right there.
Hmm.
And then all the buyers came in, went right below, just below the 50 moving average. All the buyers came in, ended with a hammer, which is usually a reversal, a bullish reversal candle. So I expect the market will probably go start back higher again, and all the buy the dippers will come in, and we'll head back towards the highs
There you go.
until Nvidia.
There you go. So, folks, again, check out Dan Bird Monday through Friday around noon Eastern while the stock market is open. And of course, he comes back here every Sunday to catch us up on the week. Dan, you're amazing, buddy. Take care.
All right, have a good weekend.
You too.